Hello, investors. Welcome to the channel where we look for possible swing trades using technical analysis. Before we begin, all I ask is that you hit the like button and subscribe. It really helps out the channel. And so with that, today we're taking a look at Home Depot Incorporated, ticker symbol HD. This is a large cap company with a market cap around $325 billion. Home Depot is well known as one of the largest home improvement retailers in the world, and quite possibly the largest. And it is a company that supplies all the things you would need to build and fix up your home, your garden, and any related properties. So here we have Home Depot's annual chart, and you'll see it is well above all the moving averages. It has traded almost dead sideways for the last 3 trading days, and it had been on a pretty considerable run after their latest earnings call, which was a beat, and that is a great sign. And you'll notice it is approaching the 52-week high. It's not there yet, but it's edging in that direction. And we have the RSI being overbought and starting to turn sideways. Both stochastics are also overbought and either sideways or curling down. The volume chart does show a slight rise in volume following the earnings call, and then we have this drop off. So we do have mostly green pressure, and it is now being it's now declining, being replaced with some red days in there, although we have not seen a full turnaround as of yet. And the MACD does look to have formed something of a peak, although it's not a drastic peak, and is falling. You'll see there is a certainly a more noticeable peak back here where we had earnings. Now, one other point I would like to look at here is if we stretch this out. First, we'll stretch it out to the 5-year chart so you can get a look at exactly what happened at COVID. Here's the drop for COVID, and then of course they quickly retraced its steps back to where it was before. And then we had the Fed pumping out money like there's no tomorrow, and we got this drastic overvaluation. And then it finally came off that high and dipped lower. So I'm going to shorten the time frame so we can take a look at after it came off these ridiculous highs from the extra $4 trillion the Fed printed. And if we can just shorten it down here to the last 2 years, you'll see this is the fall on the left side of the screen after the overvaluation. And since then, for almost the last 2 years, it's about 22 months, it has been trading, Home Depot has been trading in a fairly tight sideways range, just bouncing around, as you can see. And this range goes from the upper end about 345, and the lower end is about 265. And whenever it reaches one of those extremes, it has been rejected, either to the high side or to the low side. So we are getting close to that. We still have another $15 to $20 or so at most, if not sooner, where the share price could be rejected. But it's something to keep in mind if you are looking to get into Home Depot. This may not be the best time, technically speaking. And if you were looking to go short, there were worse times, certainly, to go short than right now. But if we, just for consistency on the channel here, take a look at Home Depot's fundamentals, you'll see this is a solid company. There's low short interest, less than 1%. Institutional ownership is solid at 68%. The debt to equity ratio is average for the industry. However, I will point out this debt to equity number is significant. And if I were looking to take a position in Home Depot, I would want more information on that debt to equity ratio. How much debt do they actually have? Because that is a big number in the grand scheme of the market. Now, the PE ratio is also high, just below 21. That is the highest in the industry. So 20.94 is the highest PE, greater than 100% of other companies in the home improvement products and services retailers industry. Now, gross margin is good, above average at 33.42%, and that beats out 75% of other retailers. Then we have an operating margin of 14.5%, and that operating margin is actually best in the industry, beating out 100% of others in their same industry there. So this is not a big profit margin industry. As you can see, the operating margin of 14.5% and the net profit margin just over 10%. So they're good numbers for this industry, but again, it's not like we're looking at Microsoft or Apple or a software company, a tech company, where the margins are drastically higher. Still, these are solid numbers and puts Home Depot at the top of the class here. And return on equity is just an absurd number, 1,151%. And I almost wonder if this is some glitch or flaw. That is simply absurd. If we look at return on invested capital of 30%, even that is excellent. But the growth rate is average for the industry. And we look at the dividend yield. And again, it says the dividend is best in class, beating out 100% of others in the industry. Now, dividend yield is 2.62%, so about double the market average. And the payout ratio of 52% means this dividend is quite secure, and Home Depot can continue to pay it for quite some time as long as they can maintain their profits. So that is Home Depot. You may want to look at going short on Home Depot or may not. But let me know in the comments below what you plan to do with this company, if anything. And if you enjoy having ideas like this sent to you, please hit the bell notification to be alerted when new videos post. Remember, I'm not offering financial advice. I'm not a financial advisor. These videos are for entertainment, discussion, and education. So please do your own due diligence before making any investment decisions. And if you'd like me to analyze a specific company using these metrics, just let me know in the comments and I'll get to it as soon as I can. That's all for today. Thanks for watching and good luck with all your investments.